Hi, good day, guys. My name is Nick, technical analyst of SuperForex. Today, we'll be looking at the technical analysis on the currency pair, United States dollars to the Canadian dollars. And first, we'll be talking about fundamentals before we move right down to the technicals, then the stock market. Now, USD focus, we've seen that the bulls are looking to seize control, sustained strength beyond 1.370 awaited, and USD has regained positive traction and draws support from a combination of factors. The Fed's hawkish outlook and the risk-off mood benefit the USD's safe haven status, while softer oil prices undermine the loonie and provide an additional boost to the majors. Now, the USD pair attracts fresh buying during the Asian session on Tuesday and retakes the 1.3700 mark, reversing the previous day's downfall, and a more hawkish commentary by the Fed along with a prevalent risk-off environment benefits the US dollar relative safe haven status. And apart from this, modest downtick in crude oil prices is seen undermining the commodity-linked loonie and acting as a tailwind for the majors. Now, it is worth recalling that the U.S. Central Bank indicated that it will continue to raise rates to crash inflation. Furthermore, policymakers have projected at least an additional 75 BPS increases in borrowing costs by the end of 2023. This, in turn, pushes the U.S. Treasury bond yields higher and continues to lend some support to the USD. Adding to this, an extended sell-off in the equity markets provides an additional lift to the safe haven buck. Now, investors might seem worried that a surge in COVID-19 and infections in China could delay broader reopening in the country. This, to a larger extent, overshadows the latest optimism over the easing of strict lockdown measures and takes its toll on the global risk sentiment. Now, furthermore, the protracted Russia-Ukraine war has been fueling recession fears and turns out to be another factor driving some safe haven flows towards the greenback. Now, meanwhile, concerns about a deeper global economic shutdown offset the prospects for a strong demand recovery in 2023 and weigh on crude oil prices. This, in turn, remains supportive of the bid tone surrounding the USD pair and supports prospects for further near-term appreciating move. Now, traders now look to Tuesday's economic docket featuring Canadian monthly retail sales and US housing market data for fresh impetus. Now, having a look on the technical aspect of things, we see from a technical perspective, it will still be prudent to wait for some follow-through buying and a sustained trend beyond the 1.3700 threshold mark before placing fresh bullish bets. Now, the USD pair might then accelerate the momentum towards 1.3745, having a dig in our 4 hours time frame to 1.3750 huddle and route to the November monthly swing high around the 1.3800 to 1.3810 region. Now, the next relevant resistance is pegged near the 1.3840 to 1.3850 region, above which our spot prices could climb to the 1.3900 level and the YTD peak around the 1.3975 to 1.3980 zone. On the flip side, any meaningful pullback might continue to find decent support ahead of the 1.3600 round figure mark, and any subsequent slide is most likely to attract some buyers near the 1.3570 region, representing the 100-period SMA on the 4 hours chart. Now, this is closely followed by over a month-old ascending trend line support, and currently around the mid 1.3500s, which should now act as a pivotal point. A convincing break below will negate the near-term positive outlook and shift the buyers in favor of bearish traders. And that's our technical analysis on today's currency pair, United States dollar to the Canadian dollar. Now let's move over to the stock markets. Hi, welcome back, guys. On today's stock market, we'll be having a look at Coca-Cola. We have known that Coca-Cola, since after the unveiling in the 2022 FIFA World Cup, Coca-Cola and Crypto.com have unveiled or inspired NFT collectibles for the just concluded World Cup. And Coca-Cola have joined forces with UNK to release a line of NFTs based on the global sporting spectacle's most memorable moments. The collection, titled A Piece of Magic, will be using heatmap data for its NFTs. Now, all users all around the world will have access to NFTs based on popular heat maps as DeFi and Web3 technology advance. Collaborations like this one become the norm. Now, grabbing one of the 110,000 NFTs would be easy, as any eligible fans would only need to register on the Coca-Cola fan zone page to claim their own piece of magic. Now, the digital collectibles will be available for international fans of FIFA. Now, the fact that these occur during a market downturn stands out most. Does this show that there is serious interest in NFTs among institutions? In a news release dated December 5th, Crypto.com announced the collection as exceptional teams competed in Qatar. Artist GMUNK, who produced all 10,000 of the different NFTs, has indicated that the backbone of each of his works is a narrative of the individual matches that generated the heat maps. And in the news release, GMUNK stated that these NFTs embody the passion of football and create a visual story unique to each match. A FIFA World Cup official also lauded the collection, describing them as unique and breathtaking. However, Crypto.com has viewed the scenario through the lens of DeFi and crypto. The marketing manager of Crypto.com, Stephen Kalifowitz, stated that this year's FIFA World Cup will be the first of its kind to employ Web3 technologies. Now, if we were to have a look at this, we are expecting a push up to the most recent resistance zone is 64.89 and a possible push up back to much more important zone thereafter at 65.58. So if we're to make an entry to this trade, and I want to run up to this point, we're looking at nothing less than 7 pips from that trade, of course, and an extension to this, we're looking at about 35, 50 pips from that trade, of course, which is good money. And that's our technical analysis on today's stock market. Coca-Cola. Remain your host, Nick. Bye for now.